AI won't magically make you a profitable trader, but what it can do is help you speed up your actual learning curve. Instead of trying to let AI trade for you, you should use it to help you build that trading foundation that could eventually lead to your consistent profitability. The prompts that I'm going to share with you today are built off of my own experience and with the sole purpose of being able to share the information that I wish I knew when I first started trading. And like always, all prompts will be available for free in the description below. If you're new to the channel, my name is Morin. I started trading in 2023, and over the past 6 months, I've been obsessed with trying to figure out how I can implement AI into my own trading. Let's get into the first prompt. So this is what I call my chart analyzer. Now, the reason I believe this is useful for new traders is because when you're first starting off, you might not yet have a good foundation in terms of understanding like what is the market context, where are my levels of support or resistance or supply and demand, right? These very basic things that are the core of your trading foundation. So the idea is I simply paste a picture alongside the prompt that I'm going to give you, and then it'll start maybe asking you some questions and be able to identify, the context, your key SR levels, just simply based off of the chart. And then you can start to think about structuring your own trade ideas, because that's not what the prompt is there for. It's simply there to help build the case and the argument, the context for you to take your own trade. So the prompt is broken down into those 4 parts. The first one being market context. Now I use the daily and weekly 1225 EMAs, which I'll show you how to put those on your chart shortly. Next is the key levels, like I said, support and resistance, and as well as explaining why. Because when you start to understand why it's marking out those levels, then you can start to think about them for yourself. The third being the stochastic RSI. So this is a momentum oscillator and plays a very, very key role in my system, especially for my range extreme trades. And lastly, we just have the confluence read. So confluence read is just there to give you an overall analysis based off of all the previous points. And again, it's not there to tell you like, okay, you should enter here, place your stop here, place your target here, right? That is for you to start to think and build for yourself. So now that you've pulled up your TradingView chart, there's going to be 2 indicators that I want you to pull up. The first one is going to be the 1225 EMAs, and the second one is going to be the stochastic RSI. Now, luckily, both of these indicators you can just simply get off of TradingView. All you do is you click on the top bar where it says indicators, and then we'll just type in stochastic RSI. And there you go. I have it under favorites. Just click on it here, and then it gets added to the bottom of your chart. The next indicator is going to be the 1225 EMA. Now, my 1225 EMA, it's a bit more difficult to kind of share the script. So to make it easier, I'll just show you how to just pull it up yourself. You simply go into the indicators again, type in EMA, and what you'll see is under technicals, you have something called the moving average exponential, which is EMA. You just simply click on it, and then you see on the top left, you can go into your settings. And the best thing to do is simply change the length to 12. Now, while I use a combination of the 1225, realistically, you can just simply use the 12 or the 25, right? One is just a bit faster moving average and the other one is just a bit slower. Now, I also recommend kind of just doing this on the daily chart, because again, I am more of a positional and swing trader. So even though I'm not executing on the daily time frame, I am using that daily for my overall analysis and understanding which trades I want to take. So for getting my context, it's on the daily. So what we're going to do is just take a picture on the top right, take a snapshot, copy the image, then we're going to head back into Claude, and we already have our prompt pasted into Claude. So now we simply paste the picture of the chart, click enter, and there you have it, our 4-point breakdown. So for the market context, what is it telling us? That we're currently sitting at approximately 64,000. We're below the daily 1225 EMAs. Both EMAs are above price and declining, meaning they act as resistance. So what that's kind of telling us is the EMA slope is clearly bearish, which they clearly are. As soon as price started to trade below those 1225 EMAs or the 12 EMA, you can see how every time it's retesting it from the underside, it's acting as resistance. So we had to move above, got back below. Now we're testing back into it again. Is this going to be the point where we reject again? Or is this going to be the point where we reject off of them? And the same thing goes to the upside, right? When price traded back above those EMAs, we had first touch of support, second, third, fourth. So you can see to the upside, you want to see those daily 1225 EMAs act as support. And vice versa, when we're to the downside, you want to see them act as resistance. Now into the second part, the key levels, support and resistance. So first level of resistance is 65K. Second one is, let's say, 59. So if I'm going to the chart, well, let's mark out those 2 levels. So 65K is going to be around here. And then the 60K level is going to be just around here. Now, what you'll notice is, that is exactly where price is capped at, right? That 65K level, which was support on the way up, has now been broken and acts as resistance on the way down. So that's what you'll naturally get is once a support level is broken, automatically you should be assuming, okay, now this is going to act as resistance. And then our key level of support is actually this 60K or 59K swing low, right? This was the low where we were in a downtrend and then started ranging. Price came back into that level, took it out, and now we're holding back above. So while we might be in a downtrend, we are still in an overall rotational environment capped between these two SR levels. And now for the confluence read, is that the current bounce is a relief rally within a broken structure and not a reversal. We're below the EMAs, stock RSIs are approaching overbought on the daily. These are honestly like all things that I would draw off of my own conclusions, even without using this prompt. So that's, again, the focus I wanted to do is put as much of my system and my knowledge into these prompts to help kind of share that information. Now, the second prompt we're going to go over is what I would call the demon tracker. Now, this was inspired by someone called Trader Dante. While the previous prompt we use at the start or before a trade, when we're trying to analyze the context, this one kind of comes towards the end of the trade after you've closed out your position. One of the most overlooked aspects of your trading is the journaling and self-reflection. You need to think of a trade as not just a singular input, but a whole life cycle. For example, you initially start with the planning of the trade, which is the first prompt. Then you got to go over the execution of the trade, followed by the management of the trade, and then the closure. And that's what this prompt tackles. So this prompt is going to ask you these 5 questions. Starting off, the overall context is that it's trying to help you with your own self-reflection. Once the trade is closed, ask the trader one by one the following questions. And then when used across multiple trades, keep track of what stage of the trade lifecycle the trader is kind of making these mistakes. So as I mentioned, is like you could be making mistakes at the start of your trade. One of the mistakes that I used to make is I would size in too much or too aggressively when I was opening the trade, which meant that like my emotions were extremely amplified, and that when there were small subtle movements in price, I would overreact, become too emotional, and then close out my position only to see that full trade play out. And then some mistakes towards the end of the trade could be completely different. For example, price is trading into my TP level, and maybe I'm getting greedy. I'm like, okay, well, price is trading so aggressively down, it's probably going to go lower. And if it goes lower, then how much money can I make more? But next thing you know, price ends up bouncing from your TP level and retraces 50% of the move. And now you're forced to close out your position because you're thinking, oh, it's just going to go back up to my TP level. So all these mistakes really vary, and there's so many of them. And honestly, I've made so many of them. But the whole point is you need to understand what mistake are you making, why are you making, and what you're going to do to fight it. And that's what this prompt goes over. I'm actually going to give an example of a trade that I recently took. So the trade example that we're going to use is one that I used at the start of the year. Now in this trade, I took a simple range extreme SFP. Now we could see that we are trading in a range bound environment. I have my range high here. Price took out a key internal high, which made it a swing failure and a higher probability setup in my playbook. If we just have a look at some of the confluences, you will notice how, when price is trading into that SFP, we have that daily stochastic at the highs. Now this provides more confluence for the setup. It's just an indicator, like I said, like these indicators, they're not strategies, but they give me more confluence. And the more confluences I have for a trade, the higher the probability it's likely to be, which means the more I'm willing to size up on that trade. So the same trade with less confluences could just be a B setup. But then with all the confluences lined up with the EMAs, the weeklies, the daily stochastic, maybe divergences, that can become very quickly an A star setup. So let's start breaking down the mistake with the prompt. Did you make any mistakes during that trade? Yes, I did. We'll continue. During what part of the trade lifecycle did that mistake occur? And that was actually during the management. So continue. What mistakes did you make? Give us as much detail as possible. So the mistake that I made was I was looking for price to trade lower. And I didn't factor in something called FTA, which is your first trouble area. I was so focused on wanting to see lower targets that I completely neglected the current level of support where price eventually bounced at. And then why do I think I made that mistake? Remember, it's important that it's asking you the why. Because if you don't understand why you did something, then you're going to keep making that mistake. And if you keep making those mistakes, then how do you expect to be consistently profitable? Like I have a diary literally for writing down my emotions through my trades. I tell my friends that they look at me completely weird, but then it's like, I know what I'm doing. I know what I want to achieve and how far I want to get in trading. And to do that, it's like, these are the things you need to do. So it's like, I'm writing down my emotions throughout the trade, and I'm really understanding myself better, because the better I can understand myself, the better I know, like, okay, what kind of little mistakes are gonna make? Like, okay, price is trading to my key level, I usually get greedy. No, follow my system, close out the trade. This is an A-star setup, I only wanna risk a small amount. No, this is an A-star setup. They only happen maybe a couple times a year, size up on that. Take advantage of it. So it's like, understanding the why really helps with you being able to fix that problem. When I'm trying to think, why did I make this mistake in particular? Well, it's simple. I was greedy. And the final question is, what are you going to do next time to avoid making that same mistake? So let's actually try to go look at that trade again and figure out, what can I do? So what we'll notice is, I was looking for these sort of lows to be taken, but what I neglected was this key SR level. Now, when I'm trying to figure out of like, okay, what am I going to do next time? I have to kind of look at these little nuances. So for example, price initially traded into that SR level. And what we notice is we actually spent over 4 days holding that level, while most of the time, the price will just continue trading lower. So the fact that we spent 4 days holding that level, unable to break down, eventually price did push up higher. And then did we, in one like very swift motion, take out all of these lows that were left behind. So the lesson is, if price is holding a key SR level for multiple days, start considering taking some profit off of the table that you can always add back on when price gets below that level. And there you have it. We have one trade logged, one mistake during the management phase of the trade. And it will actually tell you like, okay, this was the mistake that you made, why you made it, and then the next time. And as you continue to input into this prompt, you will get a good understanding of what are your most common mistakes and at which stage of the trade lifecycle you're making them. Both of those prompts will be available in the description below. There is one more prompt I'm going to share as a bonus in the description, and this is your counter argument prompt. The whole point of this prompt is to help poke holes into your plan, into your thought process, not to avoid you from taking a trade, but simply to help you understand what is the other side of that position. Because for every trade you take, there is someone on the other side taking the other one. If you found this video useful, don't forget to hit like and subscribe. As I said, all prompts available in the description below for free. That's it from me, and I'll see you in the next one.